Yo, what's up guys? It's Pygos here, the Crypto Pie, and today I'm going to give you a rundown on how I chart and how I trade, basically. So how I look at the markets. We're going to go over Bitcoin, you know, the major one here. So in cryptocurrencies, you can lose a lot of money, but you can also make a lot of money. You know, it's risk reward. Right, I've lost a lot of money and I've made a lot of money. So, yeah, there's two ways, and I always start at bigger time frames. Obviously, I don't start at a month, but you know, you can see Bitcoin started. Well, this was not the start, but this is Bitfinex's start. You see, like $129, then it went up. This is monthly. Then we went down and we went all the way up. This looks very parabolic. Parabolic is that if it only goes up, right? So if we go to the 1 week, we see a lot more detail. And according to Elliott wave theory, which is what I use, a wave starts after a breakout of a zone. So the zone here would be here. You know, we're from here till here, this is all the same zone, right? We've been trading in this range all the time. So this is where the real breakout happened. Now we're going to look at where Bitcoin is going to bring us, right? Where is Bitcoin going? So this is where it starts, right? This is your first wave, 0, 1, 2, 3, 4, and then 5 somewhere, right? Somewhere up here. It's gonna be your 5. That is Elliott waves. Now, if you understand this, it makes trading a whole lot easier, a whole lot without. Well, I'm not saying without emotion. Everyone has emotion, and when stuff dumps for days, sometimes it happens, even in Bitcoin. It's scary, but you need to understand the Elliott wave theory. If you understand the theory, you're a lot more about, yes, I should buy this dip, instead of like, oh no, we're going to lose all of our money. So we're looking at the 1 week here, guys. The way we can find our targets is by using Fibonacci. So we have Fibonacci tool here, right? We go from the top of this first wave all the way down to where this started, right? Over here. I need to adjust this a little bit. Alright. So this is pretty good. Okay, this is pretty good. Cause you can see you want to line up the tops with the Fibonacci levels. You can see this was a 2.414. That's what we're in right now. This one almost reached the 2, right? And then this one got to 1. So in order to find our targets here, guys, we can say 2.618 is definitely a target here. 6,300, around that. 6.2 to 6.3k. The next one will be about the 8.4k. The next one will be about the 9.6k. And then the next, the most top one is at the 10k, 10.2 to 10.4, I'd say. All Fibonacci's are just their zones, guys. Don't see them as like an exact level. They are zones, okay? So now you're probably asking me, yeah, but how could you enter this market? It's looking crazy. So therefore we're going a little bit more in depth. We're going into the 3-day here. Let's line this up nicely. You know, everyone likes everything nicely lined up. So here. So in order to give you that, I need to go to a different Bitcoin chart because I don't want to get rid of my my drawings here. But all Bitcoin charts are basically the same, right? So BTC USD, we're going to Bitstamp here. So I'm going to show you that in order to enter this, you can see you can also do your Fibonacci from the bottom to the top, and that tells you we went down to the 0.5 line and nearly 0.618. This would have been a great entry. So you enter on the dip of a larger time frame on Bitcoin, and if you did that again from the bottom to the top, you get to the 618 line. So, but let's say, you know, you got in here at the 0.5, you saw that it went to 0.5, so you're like, yeah, it's going to 0.5 again, I'm gonna enter right here, and then it drops further. Don't panic, because you bought yourself a nice deal. You know, 0.5, you bought yourself a nice deal. Could even drop all the way down here. But in order to get some more confluences, you could have also drawn this, the previous top. Boom. Isn't that magic? It just went back to the previous top. So Fibonacci plus the structure in the chart itself gives you the absolute best entries. But if you entered here, no problem. You did good. You can also wait for confirmation of a bounce. So let's say this happens, and then it goes back up. You see it going up, right, on the smaller time frame, on like the 1 hour, 4 hour, and then you just enter like around here. That's fine. That's good. You did good, right? So as long as you entered the dip, you bought the major dip, even though you might have bought in a green candle on the 4 or 1 hour, but you bought the dip on the larger time frame, and you already see it bouncing, so you know it's going up after. So that's a way to enter, guys. That's definitely a way to enter. So let's go back to our Bitfinex chart. Bitcoin, Bitfinex. Alright, so 3 day, then we go down to the 1 day, right? We keep lowering. When we look at charts, we keep lowering. We start at a high time frame. I'm not saying start at a week. Most altcoins don't even have weekly charts, right? But start at like at least a day. See what's going on. See what's going on with your coin. Alright, so because all patterns work, but the higher the time frame, the more likely it will work. That's normal, because the overall emotions of the people, that's all the chart does, right? It displays, it puts the emotions of people in a way we can read it. We can read it on the chart. We can read the candles. Now, candlestick reading is another thing. I'll talk about it in a different video, but this video is more about the whole trading the Elliott waves. This is more about trading the Elliott waves. So yeah, you bought here, let's say, because you were smart and you know how Fibonacci works in Elliott waves, and you know that there still needs a 5th wave to come, and people were like, no, we're going to the bottom. But I knew that another wave was gonna come. Why? Because Elliott waves, there's 5 waves, right? And not 4. The last wave is never down. The last wave's up. After that we get a correction wave of ABC, but that's a whole different story, and you don't need to worry about that for now. So yeah, so where are we at right now? So look at the 1 day. You can see we went parabolic. That's cool. Doesn't matter. We still have a target to hit. We hit like some kind of target, but you have to remember that 1.618 is the golden ratio. So 2.618 is a pretty good target as well. 6.3 is a pretty good target. So if we go to 12 hour here, you see I keep going down in time frames now. From the high, we started a week, or actually month, and now we're at 12 hour. Now you can kind of see some more detail here, right? What's going on up here. And now we go down to 6 hour, see even more detail. Let's line this one up nicely. So people like to see everything lined up nicely, right? So yeah, you see more and more happening here. Now, where would you put your stop here? It's around here, but I'm not using a stop at the moment because I see it going further. 4 hour. So also, you just see more and more detail, but you still don't see enough to really see like kind of, you can never predict the market. It's better to react. But when you're already in a coin, then it's good to predict, right? It's like prediction of where is it going to go, and where do I need to have a stop if something goes wrong. But then again, in Bitcoin I wouldn't have a stop, because I rather play the altcoins with my Bitcoin than going in USD. USD only goes down. Even your altcoins, right? Everyone's in the bloodbath right now. Don't worry, guys. You're up in dollars. Okay, so, well, most of you guys are up in dollars, right? It's just because Bitcoin goes up so much, but altcoins, you know, you keep kind of the same dollar value. So, 2 hour, yeah, here we see a bit more of the pattern, right? So 1 hour, here we can see a definite pattern. But before we go here, guys, I wanna take you guys back to here to kind of test you and see if you understand this. So what I saw here, even though I was already in Bitcoin, yeah, you can put like a line, because this was kind of the top, right? And then you can put another line. I mean, this is kind of where we started, and this was a low. So you put the 2 lines, and what do you get? Well, you kind of get a triangle that is ascending upwards. That's called a ascending triangle, and your buying places are either on the line down or when it breaks out. But you only buy it when it breaks out if the volume here, so relative to all these other candles, you see they're all kind of like the same length to like here. When one is like a lot bigger, that's your time to buy, even when it's green. Even when it's green, guys. Because, so you can see here it's green, and there's, you know, it's relatively more, it's like nearly double these other volume candles, right? So that tells you there's a healthy breakout. Now, a lot of people say like, nah, we always have to buy in the red. We want to buy in the red. Well, in this case, your red candle got here. If you bought here, you would have been off better. And most of the time, you're off better than waiting for the retrace back. I mean, we could still retrace back. Yeah, sure. We could. Definitely. Could go throw it back to 51, 52. 51, 52. Oh, guys. Wait. Where do we go then? We go up here. You're still better off here. See? So, it's not always about buying the red candle. If you buy a breakout, you often have to buy a green candle. You often have to. Right? So, I mean, you could have also bought in these little ones, but you're not sure about the breakout yet, so I wouldn't do that. It's all about risk reward. It's all about risk reward to see how much risk do I have, how much reward. So in this case, you know, your risk was 2%. In Bitcoin, I mean, it's not too high. And then you had a really nice reward, but you couldn't have known that we went here. Well, you could if you did some Fibonacci extensions, which we did. So, but then you could most likely would have said, actually no, 2.272. Yeah, you would have known this. Well, you would have said to yourself, if you did Fibonacci, this is my reward, 14%, and this is my risk. So to put that into perspective, put a long position like here. Okay, so I'm okay with this. And if it goes the other way, well, I sell out here and I lose 2.45%. That's a risk reward of 5.93. That's not bad at all. So it wouldn't have been a bad trade, my bad. But if you bought here, you're still doing good. You're still doing really good. And so volume is a deciding factor, guys. And what do we see here again? That's right, guys. We see an ascending triangle once again. Once again. So draw. Now, isn't that beautiful? So we're either gonna break down and visit back to these 53, 52 area. I don't expect any lower, and then go up. So we're either gonna take a break and then go up. For the larger stock RSI time frames, the reset, because if you look at them, 4 hours kind of nearly already resets at the bottom, but the 6 hours still up here, which it kind of wants to turn. But the 12 is up here, but you can see the 12 can be up there for several days, guys. Like how many days is this? It's a lot of days, right? It's a lot of days. Oh, how many days? 6 days. Can just be up there for 6 days, guys. How many days are we in? 4 days. So we can definitely be two days more, and something's going to happen in the next few hours, guys. I can tell you that, because we're in an ascending triangle. We're either going to go down or up. So normally ascending triangle is a continuation pattern, and that means it follows the trend, and the trend's been going up. So I'd say we go up. Now, how far do we go up? Fibonacci, guys. Fibonacci. Right now we're in between these fib levels, like 2.272 and 2.414. In between, kind of, you know. Sometimes we go a bit below it, but like I said, it's areas, right? So the next one is around 6.3 area, 6.2, 6.3 here, right? Up here. Now, another way to do this is use the line AB equals CD. I mean, you could also use the wicks, it's up to you, but to be more conservative, you don't use wicks. And there you go. That's perfect, right? That's perfect. So whether this is gonna happen or not, that's you know, that's up to the market. You just react. If you're not in yet, you just react, right? That's all you can do. And you also have to know your target. This could be a potential target, and maybe we don't go higher, but maybe FOMO happens, and you know, if FOMO happens, guys, can go very, very high, right? Can go 8, 4, 9, or even 10. So it totally depends, guys. It totally depends. So that's kind of how I trade the market, and that's how I work the Fibonacci's and Elliott waves. And yeah, that's another quick thing, guys. I mean, some people say this is not an ascending triangle. I'll show you real quick what it also could be, and that is but it doesn't change much, right? Instead of, I'm not going to use the other line real quick, but instead of being ascending triangle, it could also be a normal triangle. But what's the difference, right? You still enter on about the same level, and the breakout will just be out of a descending line. So yeah, it's just a triangle. It's kind of the same result. It doesn't really matter how you see it, if it's an ascending or a triangle. You know, people can like bitch about it, but it's about how much money you make, right, guys? Come on, it's about making money. It's not about whether you're right or wrong. If you're wrong, you gotta take your loss quickly. Don't sit around and be like, oh yeah, I'm gonna be right one day, because that one day is called opportunity cost. And if you just stay in that loss for a while, you don't have that capital to trade. Now obviously, if you have a lot of capital, then yeah, you can just stay in there. I mean, if you believe in the project, then be my guest. But if you're trading, definitely see it like this. If this breaks, then you can go out. Another way to look at this is, it doesn't always work, is using the EMA lines. The white lines, the 13 EMA is exponential moving average. That is the moving average of the last 13 candles, basically. And the blue one is the 34, is of the last 34 candles, and then you have the exponential moving average of that. And you can see that the blue is very well supported in these last few hours. But over here, it didn't work so well. So you had to use the line over here. So drawing is always better, but sometimes the indicators work, such as the EMAs. So yeah, that's kind of it. So I mean, if you want, and you don't believe in Bitcoin anymore for some reason, well, you could stop out like under 5,600, right? Under this blue line, like under 56, you know, like give it some room, and take your profits, and that's it. But I rather play the altcoins when Bitcoin goes down, to be honest. Unless, of course, after these 5 waves, I'll sell. Wait on a big dip, because that's going to be a big dip. But that's for another video, the whole corrections. I'm going to make another video about the corrections. It's going to be part 2. Right now we're just looking at how to find spots where to enter the market and how to see what wave we're in and where to take profits. If you guys enjoy these kind of videos, please like and subscribe, and I'll see you guys in the next video.